Hello, everyone. Welcome to the market update for Tuesday, October the 12th. Well, things are looking a little bit better than they did last week. If you remember last week, we were in such a indecisive phase that I felt like we were wasting time even doing an update. But we're still back and forth a little bit. But with that back and forth, what the market is showing you is that it's not quite sure what it wants to do next. And it's understandable. You've got all these factors that are playing out right now. People are trying to get signals from the bond market. You've got all these inflationary problems. You have supply issues that are taking place. You've got earnings coming up that are, everyone's trying to anticipate what these earnings reports are going to tell us. And so I expect there's going to be a lot of volatility this month. I expect a lot of back and forth. And if suddenly we do take off in a direction, that would be great. But I'm not expecting that going into a month where there is all this uncertainty. Now, I do think that as we get into the later parts of earnings season, meaning later in October, early into November, I think we'll have a better picture of what the market expects. There's a number of things that will take place up until that time. And I think, there's a chance, especially if we do sell off a little bit with some of the earnings news that comes out, I think there's a good chance we could have a pretty strong rally going into the end of the year. So I still am concerned about the fact that, we had this recent sell-off that didn't drop sentiment very much. And that's going to probably worry me for most of the month. And maybe it would be nice to get a quick sell-off that kind of flushes out some of those uncommitted buyers and raises some of that fear in the marketplace. This marketplace could probably use a little bit of fear right now. But anyway, as far as the direction alerts are concerned, again, not much has changed from last update here. We're kind of in the middle range right here. Markets today have been basically flat, not really doing a whole lot. There is some stuff I want to go over when we look at the charts. So here, market breadth is again still just kind of right in the middle there. And sentiment, though, you can see is still way too high. We're not even at the left side of that box, which I would expect at a minimum we probably should be. We're very elevated. Now, as far as the buy-sell ratios are concerned, they're basically about even right now. As far as the overall market buy-sell ratios, we're still a little bit below 1. So we do want to be a little bit cautious. I did add a couple trades to the portfolio. We'll go over those when I get to that part. But I'm probably going to there's a couple that we can still kind of take a look at here, but I'll probably resist adding anything new today, just because there's still that danger that we can get a little bit of a sell-off, and I want to have cash if it sells off to be able to jump back in and kind of get going there. The sentiment indicator is rising here. It's not at an extreme range yet, but it is off the lows. It's kind of right in the no man's land, right between the oversold area here and the overbought up here. Let's take a look at the charts. Now, what concerns me right now is I usually when you get these bottoms and they're strong bottoms, they tend to reverse sharply. You get impulsive down, impulsive up, which we saw back here, impulsive down, impulsive up, impulsive down, impulsive up. But here we got kind of a little bit of an impulsive move down, and then we kind of move sideways here, and then we have this little burst up right here. Now, back. I'm trying to remember what. Let's see. This is today. This is Monday, Friday, Thursday, Wednesday, Tuesday. So here's where we were. Yeah, we were right in the middle of that last week where it could go either way. And we did get a sharper move up right here. And by Thursday, it looked like maybe we could start taking off from here. Maybe this was the pullback. Here's the uptrend. This is the pullback. And maybe we're going to start moving higher again. But the last few days, we've kind of come back down. Now, what I'm really focusing in on right now is the possibility that this is developing a little bit of a bullish head and shoulders formation. But in order for that to be a bullish head and shoulders formation, I mean, there's still some room where we could drop down another day right here. But we really don't want to drop down much lower than where we're at right now. Usually you want your left and right shoulders to be about the same spot. I know there was an intraday low all the way down here, but if we get another intraday low all the way down here, then you've got, who knows what's going to happen there. You don't want to see that here. I'd want to see a little bit of a stronger, I'd want to see a higher low, a distinctive higher low on this, if this is on the right side of that inverse head and shoulders pattern. And I'd want to see it start moving up from there. The more it drops, the closer it gets back down to this indecision range right here, the more likely it is that we're going to see more selling. And so again, that's something just to look for this week. If we do see a nice bullish reversal day, and actually from where we're at right now, what the ideal situation from where we're at right now is to get a small gap down tomorrow, down into maybe this range right here, and then reverse, get a nice bullish candle off of that. Not a gap up. I like to see a gap down that reverses rather than a gap up. Here was a gap up, and again, there's a tendency for those to fail, and we didn't really get a strong bottoming formation down here with a gap down, a strong gap down. And in this context, you don't need a big gap down, but it'd be nice to get a little bit of a weaker open than where buyers then show up and they start pushing prices higher. And then you'd want to see a couple of days of follow through to that. What was hard about reading this day right here on Thursday was that, Thursday right here, was that we finally got a follow-through day. Remember, we were just whipsawing back here, down day here, up day here, down day here, up day here. We finally got a continuation in a direction, but it came so far off the highs of the day after that gap up that it just created more uncertainty again. It threw in the uncertainty again. So it's not surprising that we kind of pulled back from that. That was a kind of a bearish looking candle right there at the end of that day. And that kind of puts us back into this could go either way type mode. And I know that's not fun, but the good news is usually the market doesn't stay in these conditions for very long. But like I said, if you look at what the news is out there, it's not surprising when traders come on CNBC or on your favorite financial websites and they don't have strong conviction as to which direction the market's headed. That's a good sign that you don't want to be too active, or that you could be guessing on that direction, and we don't want to be guessing in this game here. All right, the Dow, same thing. You're looking, but this one is kind of an uglier chart because this can't really be a left shoulder because it actually exceeded. If this is the head, it actually exceeded that. The NASDAQ 100, could be a possible inverse head and shoulders pattern, but it needs to start moving up pretty quickly here because you usually want your left and right shoulders to be about the same spot. Any more downside move in the NASDAQ 100, and you're going to assume it has another drop to come. And then the Russell, it's all over the place. And, all you have to do is back out to a 1 or 2 year chart, and, we're just going to stick to the upper and lower part of the range. If it breaks out above here, great. If it drops below here, and we're right in the middle. So it's not telling us anything either. So, but again, this is important to be able to recognize that, too often, and I hope you don't look at this process that we do in the first part of these classes is mundane or boring, or Jerry says the same stuff every day or every week or whatever, because this is the necessary steps to recognize what's actually going on. This is how we kind of combat our personal biases. If I read an article somewhere and I'm just convinced this market's going higher, and whoever that author was convinced me that everything's going to go up from here, so I'm going to go out and buy a bunch of stocks right here. Well, when you analyze the indexes right here and everything we've done up to this point, it's saying we could go either way. There's no strong indication of which direction we're headed from here. And so the analysis would say that you're guessing if you think the market's going to go up from there, or that you're believing some guy. You better hope he knows what he's doing. You better know the guy and know that he has a track record or something if you're going to put that much trust in him to go get aggressive at this point. As trend traders, we're not trying to be market predictors, and everybody wants to be a market predictor. I mean, I don't know anyone that doesn't get in this game that doesn't get a thrill from telling his buddies, hey, I think this market's going to go up, and then the market goes up, or I believe we're going to get a sell-off right here and the market sells off. It's human nature to want to feel like you're smarter than everybody else, or that you have some sort of intuition over everybody else. That is deadly as a trend trader, to hold on to that type of mentality. You have to try to do the opposite. You have to try to fight that desire to predict. Now, obviously, in a job that I have, I've got to make. I don't even like to call them predictions. I like to call them forecasts, because as everyone knows, if you've ever watched weather forecasts, they kind of get it right most of the time, but there are times when they end up dead wrong. But they did the best they could with the data they were analyzing. And that really is what trading is all about, and doing this analysis is all about. It's trying to forecast what the market's going to do, knowing that you can't know exactly what it's going to do, and you're going to get it wrong sometimes. But the worst thing is ignoring what the data is showing you and the charts are showing you, and just proceeding headlong into a direction that really isn't there, and assuming it's there. So at this point, we're saying be very, very cautious. Could you find a trade or two out there? It'd have to be a really strong pattern, and I'm not seeing anything that's predicting a massive sell-off right here. So if you have a longer term perspective on your time frame, and you've got a good chart, I'm not saying you can't trade it, but you wouldn't want to be buying a whole bunch of stuff right here. All right, let's go down further on the list here. Bond market. There's been a lot of talk about bonds. The bonds have continued to drop. We had this impulsive move down. This was corrective. We talked about how out of that corrective move should have another move down on that. We did. Now we bounced a little bit today. It'll be interesting to see what goes on after this move today. By the way, this isn't, and I'm only mentioning this. Some of you that have been to these updates each week, some of this is repetitive, but I always get new people in, so I want to make sure that they're taught some of these correlations. Very often, there's an inverse correlation between bonds and the market. When bonds are going up, usually the market's going down. When bonds are going down, usually the market is going up. And the reason for that is typically when when traders are afraid and they want to sell their stocks and they go to cash, they don't want to just have that money sitting in cash doing nothing. They'll go into the safer investments and bonds to try to get some return, although the bond return isn't very much, but it's something. And so the idea there is that they're pulling the money out of the market, putting it into bonds. So bonds would go up, market goes down, or actually because of the market going down, bonds would go up. When they're more confident the market's going to go back up, they'll pull that money out of bonds because they get a better return in the markets. Bonds will go down, markets will go up. Now, that's kind of the typical relationship. But obviously, there's a new dynamic in here with the inflation taking off. These bond yields are going higher. By the way, when we say the bond yields are going higher, it means that the bonds themselves are dropping, going lower. So when you see the TLT going down, that means the yields are usually going higher. Bonds are dropping. Now, again, that direction tends to be more bullish in a normal correlation. But and this is where it gets kind of tricky. It doesn't mean that correlation always exists or has to exist. There can be a fear that bond yields are going up too quickly, which is what's taking place right now in many cases. The market will start selling off because bond yields are dropping a little bit or rising a little bit too quickly. And sometimes, so that spike right there might not necessarily reflect a rush to bonds to as a form of protection. It could just be a one day or a short term bounce just because those bond yields have been rising so quickly. So in other words, maybe a simpler way to describe this is that I can't tell yet if this is an impulsive move down and this is an impulsive move up, which could indicate a trend reversal. We get an impulsive move up, we get a few more days rallying in bonds, and then they start moving sideways like this. Then we'd have a stronger indication that maybe bonds are starting to rally, and maybe they could start to rally a little bit. If we chop around a little bit here for a couple of days, or even come down a little bit for a couple of days, we could expect that makes this move look less impulsive, which means we could have further to drop on bonds. When we back out and look at the bigger picture on bonds, like a 2-year chart, this is what's kind of why I'm keeping a close eye on this latest drop, is because you could make the argument that here's a bottom right down here, here's the start of a move higher. This first pullback was wave A, this attempted rally was wave B, and this is wave C, and we're going to start to see bonds take off again. But in the nearer term, the trend is clearly down right here so far. Impulsive down, corrective, impulsive down. And that move today is kind of a question mark. We don't know, could that be this is the correction and it's going to start moving up? Was this the start of it? We're going to go higher, or is this just another bounce within the downtrend that's going to lead to a lower high again? And we're going to roll over and go to a lower low. I can't tell that off of a one-day move, but this is where you can start drawing in your key areas here. This is going to be a key area right here. If the TLT can break above there, especially if it does so in a sharp fashion where that looks impulsive, I've got to be a little bit more bullish on bonds. If it breaks below this low right here, obviously that downtrend is continuing. And especially if it breaks below that low and puts in a lower high as well, then obviously that trend, that downward move is continuing. And by the way, if you're getting confused with, understanding that correlation, or, people talking about bond yields and it's just not making a lot of sense to you, just focus on the chart, okay? And understand that relationship that typically bonds will go up when the market goes down, bonds will go down when the market goes up. Because I'm telling you, if this does start an impulsive move up, based on kind of that weakness we're seeing right now in the market, it would probably be triggered by the market selling off, especially since the fear levels in the market are still so elevated. If there's some panic selling that starts to take place, and I'm talking about when we're looking at the VIX, we're always talking about the professional traders, right? Because the average trader doesn't hedge with the VIX but doesn't buy protected puts very often. It's those big institutional investors. So if we suddenly drop, they're going to pull their money out of the market and they're going to probably go right into bonds as just the normal reaction. That's what they normally do. And they don't know what else to do yet. They're confused. They've been showing that confusion in the chart patterns lately. That would be, if we start to see bonds spike up, it's probably going to be because the market is selling off, and that would be negative. So we kind of probably need to hope that this is a little bit just of a bounce, maybe get a little bit more just back and forth. Where the market can still rally and still not have bond yields spike up too much higher. It'd be nice to see a little bit more of a sideways move like this right through here. Anyway, hopefully that helped a little bit. What I try to do as best I can is because a lot of this stuff is confusing. And I know when I was a brand new trader, I never knew any of these correlations. I didn't understand the bond market. I didn't understand, but I understood charts, and a lot of times you can simplify things just not focusing on what everyone's talking about, but what is actually going on. What is the chart showing you? What is it doing? And it really cuts out a lot of unnecessary stuff and confusing stuff if you can really learn to just read what the chart is telling us. Gold. This is another one that's baffling. You look at a long-term chart of gold. The confusing part of gold right now is typically everyone hears gold goes up in an inflationary environment when there's inflation. But the real talk right now, and many of you have probably heard it, is that it's not typical inflation that we're looking at right now. It's that stagflation where we have a slowing economy, but we have inflated prices, and that's a really dangerous economic environment to be in. And I think that's part of the reason why you're seeing a lot of fear or indecision we're not seeing a lot of fear, but we're seeing a lot of indecision as traders are trying to figure all this out. So that's why gold isn't really spiking like it normally would in that type of environment. But the bottom line here is all I'm going to do is I'm going to look at, there's a double top right through here in gold. This is a double bottom right here in gold. Those are going to be the key levels in the near term that we need to pay attention to. And right here, we're back and forth. There's so much indecision going on in the gold move. No clear direction there. Now, with the dollar moving higher, we'll look at the dollar here in a second. Typically, commodities and the dollar tend to move in the opposite direction. That's another thing that's probably been put a lot of strain on the dollar rising. But we're all over the place, and so I would just focus on these two levels right here. Break out above here, that'd be more bullish in gold. Break down below here, more bearish. And I'm actually kind of leaning a little bit more towards the bearish argument in gold right now, at least in the near term. All right, so the dollar, no, oil. Oil's the next one here. Now, the interesting thing about oil is we've heard a lot about oil being, it keeps going up and up and up, and it's been what everyone's talking about right now. Now, this is starting to turn into a negative. This is one of the things that everyone's going to be looking at when earnings come out, or the higher costs of energy affecting earnings. Now, according to my calculations, though, the oil is due for a pullback. I wouldn't chase the oil trade right here. And let me give you my argument as to why. Yeah, you can look up here and say we're not quite in the extreme reversal risk range. We're close, but we're not quite there, and that would be true. But one of the calculations that you use a lot of times when you have a stock that's moving up and it has a pullback, an ABC pullback right here, and it starts to move back up again. And let's say it starts to break out. Let's say it's at a new all-time high. So how far do you expect this stock to go? How far can the stock go? Well, it's hard to know. It's never been there before. How do you get some sense of how far it could go off of a breakout like that? Well, one measurement that technical traders like to use is they like to say, okay, let's take the depth of that correction right here. Let's take this distance from the pullback right here to the bottom of that correction and project that distance upward. And that gives you kind of a target area of where that stock could run to. It doesn't always go there. Sometimes it's a little bit shorter. Sometimes it goes further. But it's amazing how often it gets into this area right here and then starts to pull back. And usually it'll pull back to the next breakout area. So I think we can take, let's go to a one-year chart so we get a little bit more context on this. I think we can take this correction right here. So we're talking about 52 to about 43, just eyeballing it. So it looks like about a $9 move, $9 pullback right here. If you added $9 to 52, you get 61. We're right at about 57. So this would say, hey, there still could be another $3 or $4 rally there. But remember, it doesn't have to go that distance, and it definitely doesn't have to go exactly that distance. So my argument would be, why chase gold right here? Now, if you're already in gold trades, why is gold in my oil? If you're already in oil trades and they're doing well, and don't get out of them just because they look like they're getting stretched. Maybe tighten up your stops a little bit. But I wouldn't be going in heavy right here because everyone's still excited about gold. Everyone's excited about oil and feels like oil can keep going higher. It's just, this would be a bad entry because the probability is that you're likely to be close to the end of that run, not the whole trend, but the end of this current run. If it started pulling back, you'd expect it to kind of pull back to this previous breakout area right here, and then maybe start to run again. But this is probably very close to an area where it would start to pull back. Now, on top of that, if you just listen to the tone of some of the oil trades out there, everyone's recommending oil right now, and everyone, I shouldn't say everyone, a lot of people are recommending it like, it has a lot further it could go. It's safe to get in. Don't worry about it being extended here. It could keep running. And that's kind of a signal that you're getting near a top when everyone thinks that gold could go higher. Now, I will say, though, commodities tend to run overbought for long periods of time. So gold, silver, oil can get into these extreme ranges and run for a while. So I'm not saying that can't happen where it just keeps going higher and higher and higher and higher and higher. All I'm saying is that this is a much more dangerous area to enter the oil trade based on that argument. And so just be aware of that. Again, if you still want to get in, at least you can see the analysis here and be aware that of some of these key levels or key points that could indicate a pullback. And if it does start to pull back, hopefully you can get out with a profit still, or avoid a big loss or something like that if it were to pull back sharply. But the trend is still up, the trend is still strong, and the trend still shows it could still run a little bit further. The dollar just breaking out to new high today. This move up, this was corrective. It's like it's continuing to move higher. Now again, this would also be a cautionary argument on oil. The dollar and commodities tend to move in the opposite direction. Again, that's a tendency. Doesn't mean they can't move in the same direction, but when they're moving in the same direction, usually you want to pay attention, because there's usually a problem there. That's usually not the normal behavior there. So either the dollar is going to keep moving up and oil is going to pull back, or oil is going to keep running up and the dollar at some point has got to start selling off or pulling back. And I see the dollar going higher, at least from right now, what I'm seeing here. And it's not in that extreme reversal risk area yet either, so it shows it can still move up a little bit further as well. And oil going higher can contribute to higher inflation, but there's a number of other factors that are contributing to inflation right now. All the ones you're hearing about, the supply chain issues, labor market. I mean, it's like a perfect storm of things that are driving everything up, prices up right now. And the VIX though here is very low. See, no concern. That concerns, no concern in this context concerns me. There should be a little bit more of an elevated VIX. It's not showing up yet. Now, some of the other ones we look at here, chip stocks. This is a kind of a warning sign. They try to rally right back here. They're right back to these lows. We already dropped to a lower low right here. It's looking more and more like chips are acting like a downtrend, lower high, lower low, lower high on that attempted bounce. Hasn't gone to a lower low yet, but it looks like it's headed there. That's not a good sign for the tech sector. Dow transports. Now these actually are showing, a little bit of a possible higher high, higher low off of this bottom right here, possible bottom right here. We'll see if this looks like a little bit of a pullback right here. Let's see if it can break out to a higher high. See if we get any sort of leadership out of the transportation stocks. It could indicate that. And again, this is really, I think, important to focus a little bit on transportation stocks, because like I said, we've been talking about the supply chain issues and the problems there. If we can start to see those companies doing better and having better outlooks, then it's a good sign that we could be turning the corner economically. Now, one thing to keep in mind is a lot of people are talking about some of these supply chain issues resolving themselves into the second quarter of next year. So around the spring of next year. Keep in mind that markets always trade, they're forward looking. So if those transportation problems are likely to be resolved or resolving by the spring, this late fall, we should start to see those transportation stocks start taking off ahead of that expectation, start doing well ahead of that expectation. And maybe that's what we're starting to see right here, is a real subtle change in that. And that's something we do want to keep an eye on. All right. And then Bitcoin. Bitcoin's been on a nice rally. Not much to really. I don't have much to comment on Bitcoin, although some do attribute or are interested to see that Bitcoin has been outperforming something like gold. That maybe it's a way that traders are diversifying a little bit. I don't see it as being a hedge against inflation, though, because gold is a much more trusted hedge than Bitcoin, at least at this point. I talked about that in the last one of the last market updates. I talked about that a little bit, so you can go back and review that. All right. So in these conditions, I'm going to be pretty cautious, but there are a couple of stocks that we can take a look at. And then we'll look at the portfolio management. There's a couple of things I need to do in there. In the oil and energy sector right here, I want to keep an eye on BTU, 98 strength rank. Now I've been watching this for a little bit. What I was looking for here. Let me switch this to signals. Is it had kind of this little bowl-shaped move, but I didn't want to chase it on the bowl because sometimes you get the handle, cup with handle, and it looks like we're kind of moving a little bit sideways right here. We might be starting to get that handle formation. So I got to put this in the watch list, and even if it goes back to a buy signal, because it could be pretty close to going back to a buy signal, it might go back to a buy signal right here. I might want to see if it can break out a little bit, or if it stays in the sideways range for a little bit further. But that's when I'm just kind of going to keep an eye on there. This is a coal stock. And the reason why coal stocks they've been nowhere for so long, but with such high demand on energy, and a lot of the coal, a lot of the stuff that coal used to heat was replaced by natural gas, but now natural gas prices are spiking so much that a lot of these electricity plants are reverting back to coal to try to save costs, save prices on that. So you're seeing these coal stocks start to take off again. That may be short-lived. I don't see these as being long-term trends, but they could be something we can take advantage of in the short term if that continues. Let's see. Another one here. Now this is going down the strength rank list a little bit. It's 91 strength rank, SMLP. And what I like about this here is that it looks like it's kind of forming possibly that inverse head and shoulders pattern. You've got the left and right shoulders lining up at about the same spot. You have a pretty clear neckline right here. Now, this is one where you might want to wait for the breakout. So I'll throw it in there, and even if we get a buy signal, I might wait for it to break out above here. We've had a lot of success lately on some of these type of very similar patterns. And so I'm willing to go down a little bit on the strength rank just because the pattern potential pattern looks so good right there. So I'm going to go ahead and put that one in. Let's click on our add to watch list here. Hold on just a second. Our site's locked up here for a second. Give me a All right, so let's go to SMLP, and we're going to add it to the watch list. Stock specific class, save and go to watch list. We'll add the alert. I forgot to do that on BTU too. Let me go add that alert on BTU. All right, and there's one more I want to add under finance. Oh, I might have gone under, let's see, let me go under. Sometimes I'll go into those sub sectors. I can't remember if I did that on this one. Ticker symbol is BKU. Let's see if I can find it here. Oh, it might have been under the buys. Anyway, let me type it in here. I have the ticker symbol. I can't remember where I found it though. Oh, it was banks, major regional. So it was under, I went under finance and then banks, major regional, and under hold right here. Yeah, there it is, BKU. Now it's recently been at a buy, it pulled back to a hold. Again, very similar possible head and shoulders pattern right here. Waiting to see if this goes back to a buy. So let's throw that one in there. And I'll put an alert on it. All right, as far as the portfolio is concerned, again, we're not going to see bigger gains until we start trending. I did add a couple. I got back into Tesla. I got into TTI. I was waiting for an entry into TTI. Now let me go through these here. STKS. I'm going to switch the signals off on this. Now we are on the far right side. So all I'm going to do here is just kind of tighten up the stop. I'm going to move it up below this low right here, which should be at about $11.40. You know, that lines up. You know, a lot of highs right in this area and this low. If we were to come back down below there, plus that would be higher than where we got in. So we basically would adjust our stop to where we should be out of the profit if we do get stopped out. We could pull back a little bit. We're right at a previous high right here, but it still is acting like it wants to go higher. So I want to let it go higher. GDYN, we are very close to getting stopped out. Our stop is right below this low right here. We have rebounded today. There is a lot of support in this area here. Let's see if it starts to rally off of that. And again, a lot of this is just dependent on what the market does. If the market can rally a little bit from here. SBOW has done well for us. This is what's really helped us. It's one of our oil stocks. It's done very well. And all I'm going to do here, we are kind of barely in the extreme reversal risk. We are looking like we might close below the low of yesterday. That is a very tight stop loss technique I've used, and I could possibly use it. But we're not in the extreme, the far right side of the extreme range. So instead, what I'm going to do is just adjust the stop up to this previous low right here. Get it right below there at about $26.50. That also lines up with this resistance right over here. And that would be it should be at a profit from where we got in. So if it came all the way back down here and stopped us out, we'd still have a gain on this thing. But we're also giving a little bit of room to pull back a little bit and possibly continue that uptrend. This is one of those oil stocks. ASPN, it's in the kind of getting in the extreme reversal risk, but it's still just kind of gradually working its way higher. No reason to get out of this, and I don't see any reason to make any adjustment just yet on this. IKNX, this is a newer one that we got into. Again, I think I have my stop down below here. I don't see any reason to change that right now. You got this little bowl-shaped move, a little bit of maybe a handle pattern right here. Still potential for this thing to go higher. Tesla breaking out again. This has been a good trade for us the last few times. Had this consolidation right through here. It's breaking out. Should go on a little bit of a run. We're just barely getting into the extreme reversal risk there. I'll look at possible stop adjustment on this if it can take off a little bit further, but I don't see any reason to adjust it right now. TTI was a newer one I got into, broke out. So we had kind of this inverse head and shoulders formation right here. We're kind of waiting for it to break out of this range right here. It did. It still could come back and retest that a little bit, but it could also start working its way back up to this previous high. So we're going to give it. I think I have the stop down. It's either below here or below here, and I don't see any reason to adjust it right now. Let it kind of get going. IRIX is a newer one I got into. I got into it. Let me go to signals here. I believe I got into it on this day right here where it looked like it was breaking out of that range. Since then, it's kind of pulled back. That was kind of an intraday high that it pulled back. But it should still be okay as long as that pattern holds. I can't remember where the stop is, but I think it's down here a little ways to where I think we're all right on that one. The pattern still looks good. All right, so that's kind of where we're at. Let me make those stop adjustments real quick. My portfolio. STKS, so our stop before was at $10.45. I'm going to adjust it to $11.40. We got in at $10.58, so we're basically putting our stop higher than where we got in, which is good. Always a good thing. $11.40. And then on SBOW, our stop was at $18.30. I'm going to raise that to $26.50. You can see we got in at $21.95. So technically we'd be at a profit if we get stopped out. $26.50. All right. Still a little bit under the 100,000, but like I said, that'll change if the market starts trending. And I want to kind of hang on to the cash here so that we can apply it if it does start to move. We can jump into some things that are trending. Um, out of the watch list, if we go through it real quick, there are a couple I'm going to boot out of the watch list. So we want to make sure it doesn't get too big. One is this KOPN. Last thing I was looking for is, does it hold this previous low right here? It's dipped below it, although barely, but that's kind of the last straw. I'm tired of watching this one, so I'll be booting that one out. TGLS, still going to kind of keep that one in for now. KD and Y is another one I'm going to just boot out. It just doesn't seem to be going anywhere. GameStop, I'll hold on to a little bit longer. DAC, some of these transportation stocks are, this is not looking good. Let me get the signals on here too. This one looks, I was hoping this was like a bottom and it would start to look like it was taking off again, but now with this sideways move, it looks like it has further it could drop. I'll keep it here just a little bit longer, but I'd rather boot some of these out because out of the transportation stock, this is another transportation stock, a shipping company. I'd like this pattern better than that last one. And there's another one I prefer. Alcoa, I'd like to jump into. If it can go back to a buy signal, I like this corrective move right here. But we're not there yet, so I don't have to make that decision. SENS, this is one I'm getting close to booting out, but I think I'll hold it for a little bit longer. ORMP, this is another one that could be considered for a new trade, but I don't want to add anything right now. ESCA, another shipping company. I like this pattern. This could be a ABC pattern, but it's getting at a point where that wave C is getting a little bit long. We're kind of back to this breakout area here. It's got to probably start reversing here pretty soon. ASAN, I actually like to see another move down on this because this is looking like this could be wave A, wave B. I'd like to get like a wave C. If it kind of keeps moving up, it could be a little bit of a bowl-shaped move, but then I'd rather see it come up and then move sideways a little bit to give kind of a couple of handle formation. But I'll keep it in for now. I do like the company. This is what we missed on Alex RX. I'm not going to chase it here. Rig is another one I'm looking to get. It has a buy signal. This is what I'm going to watch closely because I don't like the day today. It's down. It looks like it's going to retest the bottom part of this corrective phase. But if during the week it gets down here and then has a nice strong move up, maybe by Thursday we could see it. This is one I might add. This one I think has some potential to go higher if energy keeps moving higher. But like I just got to tell you, I don't want to be loading up on energy just because energy stocks have been doing well. We're kind of getting to that point where it can go through a little bit bigger pullback. TELL, kind of the same thing. ARC still looks okay. Mara, I was contemplating getting into this one too, but I'd like to see if it kind of moves sideways a little bit or pulls back a little bit, gives a little bit of a better entry. I don't like to get into it right here, right when it's at a previous high, because the probability right here is the stronger probability at this point is it'll either move sideways for a few days or a week or so, or pull back a little bit before breaking out. And I don't want to just sit there and wait for it to do that. MRIN still looks okay. And then these are the ones we added to ASMLP, BTU, BKU. All right, real quickly, let me get rid of those ones on the watch list, KOPN and KDNY. All right, that about does it. We're getting there. I mean, that's why when I talked about a couple of weeks ago when I was saying I hope the market just sells off, gets it over with, gets that fear in the marketplace, because it'll attract those stronger buyers and give you a stronger trend to trade. This is what I'm talking about. When you don't get that flush out move, you get this stagnant back and forth, indecisive, and it's not a lot of fun. You end up working twice as hard for half as much money. I've been going through, hundreds of stocks a day trying to find a pattern. Whereas when you have a strong trend, I could go through 20 stocks. I've got as many trading opportunities as I need. So I don't spend a lot of time finding them, and the probability of them working is much greater. So we're still the time to be patient, and I know it sucks. I'm the same way. I want to be doing something. I want to feel like I'm being productive, but this is also when people tend to wreck their trading accounts, when they fail to be patient and they start over trading in these conditions. Before I sign off, I do want to put on here I have a screen here. I can do it right here. My email address is Jerry, JERRY, I'm not going to write at traderspro.com. If there's a question I didn't get to in class or that you thought about later on, or you can shoot me an email up. And I usually check it about once a day. I don't check it all the time throughout the day because there's so many things I'm working on, but I'll check it usually once a day. And if there's questions there, I'll try to answer those for you. Okay. All right. Thanks, everyone. Have a great week. We'll see you on Thursday for the stock specific class. Bye now.